Meantime, let's continue to stay overseas, at least talking about what's happening overseas. Leslie Picker joins us now with more on the struggles at Credit Suisse, and want to get a sense of her reporting. I know she's been on the phone all weekend as well. Leslie, what do you know?
Yeah, Andrew, Credit Suisse is facing a crisis of confidence over the weekend, at least on certain social media platforms, with hordes of gadflies abuzz with proclamations of its, quote, Lehman moment. Now, the stock price slumping today as the firm's C-suite seeks to reassure investors that the bank is not on the brink of collapse. Questions around the health of the firm swirled after a report about a week and a half ago that the firm was sounding out investors about a capital raise. That news, although since disputed by sources close to the firm, sent the stock to a record low, and it's fallen almost every day since then. So on Friday, that prompted CEO Ulrich Korner to send out an internal memo, which was obtained by CNBC, where he said, quote, I trust that you are not confusing our day-to-day stock price performance with the strong capital base and liquidity position of the bank. Still, credit default swaps, the cost of insuring the firm's bonds against default, spiked to about 2009 levels, which was reminiscent to some on Reddit and Twitter of the financial crisis. Others less convinced. Saba Capital's Boaz Weinstein, one of the most active CDS traders out there, has called several tweets predicting Credit Suisse's demise as, quote, scaremongering. Defenders of the firm point to the firm's common equity Tier 1 ratio at the end of Q2. This is a measure of health of the firm, which was 13.5%, higher than most U.S. banking peers. I'm also told by sources that there's genuine interest in its securitized products unit, which could help shore up some capital. However, Credit Suisse is sitting on hundreds of millions of dollars in losses from leveraged buyout-related debt that the market won't absorb amid risk-off sentiment. And it's impossible from the outside to get a minute-by-minute account of other risk on its balance sheet. So for now, we have to wait and see. The firm plans to release its full transformation plan on October 27th, assuming the markets can be patient until then, guys.
And that's what we were talking about earlier, Leslie, just the idea that perhaps the markets won't be patient enough, at least to wait till the 27th, whether in fact they'll have to move that plan up, how far they are along in that planning, and not just what that plan looks like in terms of the restructuring effort, but also whether they need to sell assets as part of that restructuring effort. And one of the things that they may be intending to do over the next 3 weeks is, in fact, that. Do you announce without those pieces in place? Part of this will be the patience of the marketplace.
And they put out a press release last week saying that they were undergoing a strategic review for various assets and divestitures in order to raise cash. But as you know, Andrew, restructuring, transformations, these things don't come cheaply. Even laying off hordes of bankers doesn't come cheaply. That costs money, and you need money to actually be able to do that. And so in talking to people, 3 weeks, obviously a long time when you're in a situation like this, but for a full transformation plan anywhere else, that's a short amount of time. It'll be interesting to see kind of how they approach things from here and whether they need to do more to really calm what's going on in the market dynamic right now.